The US dollar. Big upside pressure then, as expected. We were looking for this. What did we say? All those weeks ago, we were knocking on the door, knock, 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 knocking on the door of this area of liquidity. Big breakthrough. We cleared this gap. We filled this gap. Remember, this was the gap on the ceasefire. The case was stacking in favor of dollar upside pressure, was it not? Right. And obviously, the cherry on the top, what helped us get that breakthrough, what helped the dollar, should I say, if you look on Friday, very, very strong jobs report. 172,000 jobs being added to the economy. Previous was revised largely up from 115 up to 179. Average hourly earnings inflation rate 0.3% above expectations of 0.2 or previous of 0.2. So inflation, wages are going up. That's inflationary. Now, when you look, obviously, in all of this, it all comes down to what are markets now expecting with rates. Rate probability is drastically rising, the hike probability. July has creeped up a little bit, but look at September, almost 50% probability. Look at October, over 50%, 58.6%. And in December, 76.8 or 4% probability. So with all that, inflation expectations rising, higher rates, escalation, as we've seen now, Israel now hitting Iran retaliating, understandably. There's a back and forth. This is no longer just US and Iran anymore. Like now Israel being drawn into this tit for tat. It's not looking good at all in terms of on a war front. So all guns blazing for inflation, all guns blazing for the new Fed Chair, Governor Warsh. But we can see where we're going to be drawn into. We said this, once we get that breakthrough, we're going to be drawn into that next major area of liquidity for 150. Now, in terms of the sustainability of that for the dollar, will come down to this Wednesday, where we have the CPI reading from the United States. And as you can see, inflation expected sticky. And are we surprised given how solid jobs report is as well? Bear in mind, we've got all this, obviously, this war, this tariff inflation, but then the labor market's still resilient. We're still getting jobs being added. We're still getting decent people wages, people getting paid. So if all this is obviously supportive of potential sticky inflation. If that number comes out higher, we're going to be drawn into this area of liquidity. The further sustainability of that, we'll talk about that further once. And if we get there, which is, as I say, the odds are stacked in our favor. And guys, in terms of daily analysis, trade ideas, AI and macro and Ken Powers, there's a number of powers there. You can check out the link in this description or somewhere below this video in this article if you're reading the article to get access to Macro Mastery Pro, which you can get for free. Catch you in the next one.